I shall be explaining you a bit about my company first before coming to the question of why the issue size has been reduced. Our company is a cable and conductor manufacturing company which has been in this line since more than 3 decades. We are the largest manufacturers for cables and conductors in Eastern India as per CRESL report, and we have a basket of products that bring about a lot of value into the company. We are among very few companies who are almost fully backward integrated, thereby giving us the advantage of cost and supply chain. And apart from that, the products that we make, we are also having our EPC arm where we are doing an erection job. So we are capturing the complete value chain of a cable and conductor manufacturing sector, where we are procuring raw materials from primary producers, making the product and installing the product and coming back. Now, this is a bit about the company, what its activities are. During the process of going into listing, a value was decided, a fundraise plan was decided, and subsequent to that, we got feedback from the BRLMs and from the investors that we should be raising around 500 crores for the primary raise of 500 crores approximately will reduce our debt level by more than 50%. Having said that, with that reduction, we will also be improving our balance sheet. Balance sheets will become lighter. It will become re-rated, and going forward, we will reap the benefits from the cost of funding that will come down. That will also reflect in our PAT. So that was the deliberate choice that we had made. So when I talk about my revenue, you will see that our revenue has grown from 1700 crores in FY24 to 2500 crores in FY25 and moderated a little bit in FY26. Having said that, that has been a deliberate choice because we are trying to move away from products that are commoditized in nature and going into products that are more margin driven. So as a company, we are chasing margins more than revenue. That is why you will see our EBITDA margins have improved from 8.9% to almost 13% in the current financial year. This has also happened due to the introduction of new products in our company. For HT cables, which are used for underground power distribution systems, we are the largest manufacturers for 11 kV, 33 kV underground cables and medium voltage covered conductors which are used in the overhead lines. So we are the largest manufacturer for that in Eastern India, and our revenue from that segment has improved from 9% to almost 24% in FY26, and going forward this share of revenue from this segment is going to improve further. Having said that, the company has also tied up with a technology provider in US. It's called TS Conductors of USA. They have tied up with us in India to manufacture that product locally. Now I'll talk a little bit about that product. That product is a product which is used for increasing the transmission line capacity by 2x or 3x without the need of changing the towers, which means that if there is a line which already exists, using those same towers, we can increase the current carrying capacity by 2x and 3x. And for this, our company has tied up with a company in US which is bringing in the best technology of the world to cater to this requirement. In the coming years, this will be a big challenge for our country. As you already know, energy sector is very important for a company, for our country. There is a lot of space for our company to grow in this sector. I'll let you know a bit about the transmission and distribution space. If you look at national electricity policy, it clearly outlays the kind of expansion that we are planning right up to FY32. We are planning to increase our transmission capacity because the point of generation of power and the point of consumption of power are having infrastructures that were built way back without having the plans of evacuation being proper. Now, if you look at some places, power generation has increased by 2x or 3x, and matching transmission lines or power evacuation lines are not existing. There we will have enough scope with the new technology that we are coming with the new product. We'll have enough scope for expansion in that space. And apart from that, the power infrastructure plan of India is going to be to improve the distribution of power through the plan of data centers that is also being planned in India a lot. See, the product that we are coming up with, that product is primarily a solution product. So if we have to grow in the EPC space, we do plan to come up with this new product which will bring better EBITDA margins. So with this new product, we are thinking of going into a bit more exposure into the EPC space. But having said that, our company is having a sweet spot of around 70% manufacturing and 30% EPC, which gives us better EBITDA margins and better control over projects. So that is the way we look at it in future. But with the new products, if we have to increase our revenue from the EPC side, it will only increase with the new products. So we are one of the major manufacturers of signaling cable and quad cable in Eastern India. And very recently, a lot of announcement has been made for capex in Eastern India itself in the railway segment. So we do see this as a great opportunity for our country to capture the growth, and our railway business contributes about 12% of our manufacturing revenue. With this opportunity coming up, we do see a lot of growth happening there as well. Laser power has its strength lying in the innovation that it has made over the years. Laser power has ventured into new products, taken up the challenges of backward integration, and also taken up the challenges of forward integration into erection. This is something that is unique to our company, and going forward, we are also innovating into new products that will bring up more energy into the company. There are conductors that are used for high performance. We are also coming up with that. We are also planning to venture into higher voltage of cables in the future, and we do have enough land bank to do new kind of expansion that we want into new areas. So that is how we are going to take it forward.